for joining us this morning, Brian. First of all, if I can ask you, looking at the European debt contagion, how worried are your clients, if at all, and how are you positioning yourself ahead of what could be a pretty bleak fourth quarter?
Well, I'd say our clients have been fairly quiet through this, and we've continued to get decent flows in most of our products. But it is scary. The market is priced for some kind of Lehman-like event. Will that happen when Greece goes into default? People don't really know. It's clear that this is coming to a head, though. There's a lot of events that are going to be happening just in the next 2 to 3 weeks where, whatever's going to happen is going to happen, basically.
You say worse or a Lehman-like crisis again. Could this be a lot worse, do you think, sovereign debt crisis, etc.?
Well, if it's not handled appropriately, all kinds of things could happen. I mean, if you wind your mind back 3 years ago to when Lehman failed, there's a big difference today versus then, which is nobody expected Lehman to go into an uncontrolled bankruptcy. Nobody knew exactly what the exposures were, and this caused the banking system to completely freeze over in the fourth quarter of 2008 and into the first part of 2009. With respect to Greece, where the debt is located is reasonably well known. And it seems to me the game plan coming out of the IMF meetings and G20 meetings and all these different meetings these guys have been having is to get this EFSF up and running, foam the runway, so to speak, term out banked money market and interbank funding in the very near future, and then let her go and have some kind of pre-packaged Greek default. And at that point, we'll see whether there's a Lehman effect or not. Remember, Bear Stearns failed and the world didn't fall apart. General Motors failed and the world didn't fall apart then. It was only when you had an uncontrolled and widely unexpected bankruptcy that you had the cataclysmic outcome.
And Brian, you say that you like long-term players' energy, but how do you position yourself ahead of the fourth quarter? Are you going to just safe havens or any risk at all in your portfolio?
Oh, there's plenty of risk in our portfolio. Look, if for some reason Greece goes bankrupt and goes into an uncontrolled default and it spreads to Italy, which is a $3 trillion bond market, I don't know how you're going to put Humpty Dumpty back together again in terms of the world economy. It's going to be a mess. But that is such a catastrophic outcome. It's very clear that central authorities understand this and recognize this, and I think there is a plan. Admittedly, it's a bit scattered to keep that kind of worst-case outcome from occurring. So what you need to do as a portfolio manager is ask yourself, what do I believe in? What companies do I like the most? And go with those and understand that you're not going to be able to time this perfectly. There's no way as a portfolio manager you could know how this is going to turn out, and then once it turns out to be good, to go in and buy everything that you like. You're not going to be able to move that amount of money quickly. So we like energy, we like technology, we like industrial businesses among cyclicals, we like some defensive retail, we like certain parts of healthcare among non-cyclicals. You try to go down swinging with stocks that you like, and if it's the worst case, which is that it's an uncontrolled situation, well, I don't know what to say. It'd be a tough world to be in, and the fact that your portfolio goes down, that might be the least of our problems.
Brian, thanks for your time. Good way to end it. Thanks so much indeed for joining us. Brian Barish, the CIO of Cambiar Investors and also the president as well.